On Business Incorporated today, Zambia holds key rate as currency and inflation tapers. Egypt money supply grows 17.2%. ENI discovers more oil block offshore Ivory Coast. Hello and welcome to the program. I'm Ini John Mekwa. Well, let's start with trading at intraday on the African continent. After 3 negative sessions, Nigeria's NGX seemed to be on a rebound, even though it was flat at intraday. It's on the positive trend, while South Africa shed 0.64%. EGX 30 of Egypt added 0.15%, while Kenya shed almost 2% at the close of trading yesterday. Most markets were trading negative at intraday in the Middle East, except for Abu Dhabi, which had added marginally. Dubai shed 0.14%, while elsewhere, Saudi Arabia lost 0.06% and Qatar was down 0.21%. We move to Europe now, where stocks edge higher this morning as investors geared up for the next reading of United States non-farm payrolls, which is due tomorrow. The pan-European stock 600 added 0.3%, with travel and leisure stocks climbing 1.1% to lead gains, while basic resources dropped 0.6%. We have Christy joining us from Frankfurt now to tell us more from there. Hello, Christy. Good afternoon.
Hello, good afternoon.
Yeah, so with Germany's federal election just over 3 weeks away, polls show that the business-friendly FDP party could be playing kingmaker as politicians form a new coalition government. What more can you tell us about this?
Right. Well, it's still anyone's game. What we are seeing in the polls are declines for Angela Merkel's CDU party. We're seeing declines for the Greens. And this has all been to the benefit of the FDP, the Free Democratic Party. Now, the platform for this party is being pro-business. They're pro-free market. They're against raising corporate taxes. And this puts them at odds with, for example, the Green Party, particularly when it comes to climate targets that they have in focus. The FDP basically says that these targets are too ambitious and that the German industry cannot bear the burden of reaching these goals. Now, if we see a CDU win, FDP has always been a classic choice for them in forming a coalition government. But this time around, even if we see a win from the Social Democrats, their candidate Olaf Scholz, it's been said that he also would be inclined to go with a coalition, including the FDP. So this raises some interesting questions for policy in Germany going forward, particularly when it comes to how they'll be spending on climate change.
Yeah, well, we still have 3 weeks, so we'll see where it swings to, within that 3 weeks. But some European Central Bank policymakers have expressed concern over the high Eurozone inflation, which was released earlier this week. Now, does this signal an end to the pandemic stimulus?
Right. Well, yes, as you said, what we saw earlier this week was August inflation in the Eurozone at 3%. This is the highest we've seen in a decade, and it's also above the ECB's own target of 2%. And so what we've heard from some ministers this week in response is really a repeat of stances that some of them held before the pandemic. So during the pandemic, we really saw the ministers at the ECB quite united on the easy monetary policy that we've seen over the last year and a half. Now we're seeing signs of an economic recovery. In the U.S., the Fed has already signaled that at the end of the year we could start seeing a tapering of stimulus. The ECB has been more cautious on this. However, these ministers, and I'm talking about the minister from Germany, from Austria, and also from the Netherlands, they're saying inflation it could be a bigger issue than some think, and that we have to take a second look at this stimulus. Now, the other ministers, they're not as convinced. Now, they will all be meeting next week for their monthly meeting, and I think we will be getting some interesting discussions this time around for sure.
Okay, we're looking forward to that. A survey has shown that in the German automotive industry, digital skills are much more desired now than they were 5 years ago. Obviously, a lot of things have changed.
Right. Well, we saw a survey about just this week coming out from Germany's IFO Institute for Economic Research. Their survey showed that new job postings for the automotive industry that include the desire for digital skills have doubled in the last 5 years. Now, if we take a look at the industry overall, this makes a lot of sense. You know, what's happening in the auto industry right now? We're moving towards reducing CO2 emissions. We're moving towards autonomous driving, all highly technical skills that this industry is needing now to go into the future. Germany has actually for a while been ahead of the curve compared to other countries when it comes to the highly skilled technical labor in its automotive workforce. This can be traced back to Germany's engineering prowess that we've known for a long time. Interestingly enough, these new skills are being found in these new hires, in these job postings. They're looking for people who are joining the workforce who have these skills already, as opposed to training the labor that they already have. So that's sort of an interesting approach that they have to approaching this new skill set.
Yeah, but somebody still has to train them if they're looking for those who are already trained. Well, thank you so much, Christy, for the updates. Exactly. So we'll talk to you again and enjoy the rest of your day.
You too.
So let's move now to London, where we have Juliana joining us. The FTSE isn't looking as good as it was yesterday, but Juliana has the details. Hello, Juliana. Good afternoon.
Good afternoon, Nini.
Yeah, well, the FTSE might not be looking so good as it was looking yesterday, but it's brighter days for airlines. We see a boost in travel business activities for UK airlines, aerospace, and manufacturers in the UK. I guess this is obviously due to the easing of restrictions.
Well, yes, I've got to say, Innie, if you do want to find a positive sentiment about the airlines here in the UK, you'll have to dig for gold, really. But I have found a little bit of gold, and that's some news for a very, very, very important people that are lucky enough to access British Airways' Concord Lounge. This is for the very elite, those who like to travel first class, or if you are some sort of a diplomat. They've just announced today that they are going to be opening up these Concord Lounges. So these are available in Heathrow and at JFK. So this is a good news for the airline industry, because of course a lot of business travel and communication has stopped, really. It's all gone over to Zoom. So the fact that they feel confident enough to open these Concord Lounges does show that perhaps premium customers are coming back to the airways, and also the fact that they're coming back in good numbers. So I did have to dig, but I found some. I suppose we'll just have to wait for a couple more weeks to find out just exactly what trade was like during the all-important summer months, where a lot of airlines are waiting for that custom to come back again.
Yeah, well, we're patient. We're going to wait, and I'm sure by the time you continue with your digging, we'll get more good news. But the UK food and drink sales isn't recording good news. It's fallen sharply in the first half of this year.
Yeah, pretty set of disastrous numbers from the Food and Drink Administration for Prime Minister Boris Johnson's government, showing that in the first half of this year, exports going into the EU fell by to the tune of £2 billion. Also, not just exports going there, imports coming from the continent also fell. So I know a lot of people on Twitter have been complaining about not seeing a stronger variety or a greater variety of things like cheese and pork and other meats and produce. This is a massive issue. We have been talking a lot about supply chains. The FDA, they have cited pandemic, but also Brexit. We know that lots of migration rules were tightened during that period. So that's a massive shortfall, £2 billion. good thing, well, the only good thing about this data that was released is that food exports and food imports in non-EU markets is increasing. It's the first time it's increased in several years. So in the first half of the year, it increased by about 14%. So it seems as if trade between regions such as China, the Middle East, the Gulf regions, Australia and Japan is falling. So that's a tick for Liz Truss, the Trade Secretary, who's been dotting across the world over the past few months trying to find these free trade deals. So hopefully things could be well in the foreseeable future. But at the moment, there's a big sting in the bonnet for this loss of EU trade.
But and the FTSE too isn't looking as good as it was looking yesterday.
Unfortunately not. The FTSE is underwater at intraday, very much in the red. We're all waiting for the all-important American jobs data that's probably due in any time now. So the FTSE all-share at intraday is down. It's down 0.06%. The FTSE 100 also down by 0.04%. The FTSE 250, the domestic market, down too at 0.14%. In currencies, the British pound is up on the US dollar by 0.15%, up on the euro by 0.07%, and up on the Japanese yen by 0.11%. The only blue chip riser today was Rightmove, the housing property advertiser. It seems as if they got a belated boost from yesterday's housing price data from Nationwide, showing that house prices are still on the increase.
All right. Thank you so much for the update, Juliana, and enjoy the rest of your day.
Thanks, Ine.
So let's move over now to Asia, where shares were mixed as Australia reported a higher than expected trade surplus in July. The S&P AX 200 in Australia closed 0.55% lower at 7,485.70. Australia recorded a trade surplus of 12,117 billion Australian dollars in July. Elsewhere, mainland Chinese stocks closed mixed, while the Shanghai Composite was up 0.84% to 3,597.01. The Shenzhen component shed 0.25% to 14,277.34. Hong Kong's Hang Seng Index closed 0.24% higher at 26,090. Chinese tech firms in Hong Kong also largely saw gains on the day. Tencent jumped 1.56% and Alibaba rose 3.51%. The Hang Seng Tech Index advanced 1.61%. In Japan, the Nikkei 225 closed 0.33% higher at 28,543.51, while the Topix Index finished the trading day 0.14% higher at 1,983. South Korea's Kospi dipped 0.97% to close at over 3,000. MCSI Broadex Index of Asia-Pacific shares outside Japan sat above the flat line. We move to the United States now, where stock futures gained slightly today after the S&P 500 finished the first trading session of the month near the flat line. Dow Jones Industrial Average futures were up by 67%. S&P 500 futures gained 0.2% and Nasdaq 100 futures added 0.2%. Key jobs data is expected and could dictate trading in the next 2 days. Weekly jobs claims are expected to fall to 345,000, down from 353,000 in the prior week. Friday brings the big August jobs report, which investors are watching closely to decipher how fast the Federal Reserve will remove easy monetary policy. We're very big movers in the pre-market trading. Shares of Moderna were up by 1%. Shares of ChargePoint, the maker of charge systems for electric vehicles, also jumped 12% after reporting stellar quarterly earnings. Pet retailer Chewy and retailer Five Below saw shares tumble 9% and 8% respectively after reporting quarterly results. But the Nasdaq Composite advanced 0.3% to about 15,000, and that was hitting a record high. Well, we'll take a short break now. When we come back, we'll give you stories from the African continent. To stay with us is Business Incorporated on Channels Television. You're welcome back. You're still watching Business Incorporated on Channels Television. Well, today on Commodities Market Update, we're looking at flour. Flour, which is a product of wheat milling, is highly import dependent. Therefore, the exchange rate volatility adds another dimension to its price movement. Recently, The price of a bag of flour has risen by 15%, going from 17,500 to 20,500. Well, let's talk about it more with Temitope Fatoba, research analyst with Financial Derivatives Company. Hello, Temitope. Good afternoon.
Good afternoon. Thank you for having me.
You're welcome. Well, the sharp spike has caught the industry by surprise as the price of flour. And by implication, should we expect another? I mean, we're still trying to survive from the hike of price of bread and, you know, staple food like that. Should we expect another hike in price of staple foods like bread?
Yeah, yes, definitely, because on the global market, this is a highly import-dependent product. So we're only able to produce about 400,000 metric tons, as against the 4.7 million metric tons that are consumed in the country at the moment. So, of course, the CBN recently banned milling companies from accessing FX on the I&E window, which, of course, has had an effect on the prices of flour, which millers are no longer able to absorb these costs. And hence, the result we have seen is the millers now passing those costs down to the consumers, which is what has caused an increase in the price of flour at the moment. And of course, with the dollar appreciating against the naira on a daily basis, we expect that we might not find any solutions to this flour reducing anytime soon. Because on the global market, the price of flour as of January 2021 was 442 bushels per dollar. But now, as at July end in 2021, it is as high as $702. So you can imagine the costs of importation for the millers.
And flour is typically a price inelastic commodity because it has no near perfect substitutions. I mean, even when we tried it with cassava, it did not really work. How is this new price threat supposed to affect general price level and inflation in the country?
You know, bread is a staple food in most homes. So for most of us usually have bread as breakfast. So what we have is we don't really have a direct substitute for bread. What we can basically say is we might have alternatives. And when I say alternatives, what we have as alternatives are gari, beans, rice, and the likes. But recently we have seen an unprecedented increase in the price of these commodities. So on the long run, so people are still forced to try and take bread because able to buy a tuber of yam now in the market is relatively very expensive. So those are the various challenges we're facing. And despite the fact that we are in a harvest season, because of the insecurities in the north, we have not been able to produce enough capacity to meet the demand of the population. So definitely we still see prices of commodities like bread, beans, rice, and the like still being expensive in the market. And we must also not forget that flour is also a raw material for making pastries, cakes, confectionaries, biscuits, which are used in restaurants, bakeries, hotels, etc. So it's a whole challenge basically for the economy.
Well, unfortunately, it looks like Nigeria has given up on using cassava for bread. You know, it would have come in very handy at this time. But what can be done by the government to aid the flour milling business and also to reduce this high dependence on imports of wheat?
Okay, what the government can do is provide the infrastructure that would reduce the costs of logistics. Another thing the government could look at is also to invest in research through the IITA, varieties of seedlings, which can help increase our yield of this wheat, so that farmers are able to grow more of these products. Another thing is there was a national strategic national grain plan, which the government had implemented earlier, but I think they later abandoned it. If the government can revisit that, I think those would reduce the effects of these increases in price in the short term.
All right, thank you so much, Temitope Fatoba, a research analyst with Financial Derivatives Company, and enjoy the rest of your day.
Thank you very much.
So let's move over to Zambia now, where the central bank kept its benchmark interest rate unchanged, with inflation seen decelerating faster than early expected. The Monetary Policy Committee held the rate at 8.5%, and this was the MPC's first rate decision under a new government following elections last month. The decision to hold was supported by a slowdown in inflation from a near 19-year high in August, as expected to be sustained on the back of a stronger kwacha. Zambia imports everything from fuel to food, so currency volatility has a major bearing on price growth. Analysts see inflation on a downward trend, although remaining above the central bank's target of 6 to 8% for the next 2 years. Price growth is expected to average 22.6% this year, 15.5% next year, and 11.9% in the first half of 2023. A sharp drop in yields at the government bond auction that saw record demand also seems to be signaling that investors expect inflation will cool in the coming months. We go to Egypt now, where money supply grew by 17.2% year-on-year in July. Money supply stood at 5.43 trillion Egyptian pounds. That's about $346 billion, up from 4.63 trillion pounds a year earlier. According to the central bank, Egypt's domestic liquidity also rose to 5.4 trillion pounds at the end of July from 5.36 trillion pounds in June. The growth in domestic liquidity was reflected in the growth of the quasi-money to around 4.13 trillion pounds from 4.10 trillion pounds. And ENI announces a major oil discovery in Block C1101 offshore in Ivory Coast. An Italian oil and gas player has made a major discovery off the shores of Ivory Coast. The block is operated by ENI with a 90% interest, with PetroSea holding with 10% interest. The well was drilled about 60 kilometers off the coast in about 1,200 meters of water depth, with a Sapien 10,000 drill ship, and reach a total depth of 3,445 meters in 30 days. In South Africa, the country's manufacturing activity rebounded in August after normality returned to businesses affected by looting in July and some lockdown restrictions. The seasonally adjusted Purchasing Managers Index survey shows a growth of 57.9 points in August compared to July decline of 43.5 points. According to the survey, the business activity and new sales order indices staged a strong recovery and erased losses seen in July. The Purchasing Price Index also saw an increase to 84.2 points, which was likely driven by fuel price hikes and a weaker rand. So let's go to the oil market now. Global oil market prices fell today after OPEC Plus agreed to keep its policy of gradually returning supply to the market at a time when coronavirus cases around the world are surging, and many U.S. refineries, a key source of crude demand, remained offline. Brent crude was down 16 cents to $71.43 a barrel after dropping 4 cents yesterday. U.S. oil fell 23 cents to $68.36 a barrel after rising 9 cents in the previous session. OPEC Plus has agreed to continue a policy of phasing out record production reduction by adding 400,000 barrels per day each month to the market. However, OPEC Plus raises demand forecast for 2022, while also facing pressure to accelerate production increases from the Biden administration, which said it was glad the group had reaffirmed its commitment to raising supply. U.S. crude inventories dropped 7.2 million barrels, and petroleum products supplied by refiners rose to a record despite the increase in COVID-19 infections across the country. In the metals market now, gold prices held steady ahead of the U.S. non-farm payrolls data that is crucial to the Federal Reserve's tapering plan, even as the private payrolls report missed expectations. For the fundamentals, spot gold was steady at almost $2,000 per ounce. U.S. gold futures were little change at about the same amount, and silver was flat at $24.17 per ounce, while platinum fell 0.6% to just about $1,000. Palladium eased 0.2% to about $2,500. Well, that's it on the program today. Thank you so much for watching. I'm Ini John Mekwa.